Yeah, and I did say potentially, of course. This nothing is certain, but I have a feeling there are too many people that really downplay silver. They say, yeah, it will go up, but it will only be an industrial metal. I mean, I have to thank Eric Young or King Kong. The other day I interviewed him and he said to me, the higher the price of silver goes, the more important silver will become.
Maneco64 and Clive Thompson reveal silver could return as monetary asset in bimetallic system. Silver rallied $10 in 10 days to $58. Gold-silver ratio at 72 targeting 50 to 1 short term, possibly 15 to 1 like 1968 to 1980. India monetizing silver from April with 300 million middle class. Higher prices make silver more important for central banks. Bond bear market faces 27 trillion yearly rollover versus under 1 trillion precious metals production. Japan crisis. Yields at 1.949% if 2% all tax revenue services debt. Yen could hyperinflate first. Powell may announce $45 billion monthly QE January. Trump 401k order. February unleashes $9.3 trillion. Central banks buying physical not paper since 2022. Subscribe to Fine Metals for more updates.
Pace by, sometime middle of next year, it will be over $100 and probably $200 in 2 years' time. I can't even, I'm looking a week ago, we we're at $48. Where are we now? We're at $58. $10, it's maybe 10 days, $1 a day, really. He's not saying where it's coming from. And then it says UBS has a similar forecast of about 40 billion per month beginning early 2026.
Well, yeah.
So
They might
maybe,
even start before if there's some kind of liquidity crisis in the next few weeks, and you shouldn't count that out, I think.
I mean, these are just, I suppose, educated guesses by these people, but I guess
Yeah.
they're well connected and they've got a feeling for which way the wind is going to blow.
Yeah, that's right. Yeah, 58.36 was the close on the spot. And also the gold, I'll bring it up right away now. We look at some charts. Well, oh, here it is. The gold silver ratio looks very negative, which is bullish for silver and bullish for precious metals in general, because since the Bretton Woods system was,
I mean, I think if gold keeps going up, silver will go up faster and that will reduce the ratio. Where I think the short-term target to aim for is something like 50 to 1 silver to gold.
seeing 15 to 1 again. Some people think that's impossible, but uh, if you go further back in 1968, it was also 15 to 1 or 16 to 1. And the other thing that are in the bear market, they've been in the bear market since 2020, in my opinion. The 40-year bull market we had in bonds, that's over. And yes, the TLT, which is ETF for like representing long-term treasuries around 20-year maturity. Yes, it's up slightly on the year, but you can't really compare it to gold and silver. And I think, Clive, it's not just treasuries, but also corporate bonds and other kinds of bonds. There's so much debt around, Clive, that I think every year the bond market has to reissue like 27 trillion because a lot of these bonds mature and they have to roll it over. And the gold and silver market, the new issue or new production of gold and silver is less than a trillion. So, I mean, people are gonna tell themselves we need to have some gold and silver, even if they don't buy like 20% of their, let's say, portfolio into gold and silver. But if they decide to lift it to 2% from nothing, or even five, that's huge.
I mean, the rate of expansion of government debt is going faster than the people's wages, faster than the cost of living. So government debt and debt generally as a percentage of what's on the planet is becoming a bigger and bigger proportion. And ultimately that means that we get to a point where people get to an indigestion level and they say, I don't want any more of this government debt, and that's when the yields will start to rise to unacceptable levels. When that happens, probably the central banks will be invited to step in and act as buyer of the last resort, what they call yield curve control.
Financing for all Japanese government bonds goes to 2%. That means that all the tax revenues that the Japanese government gets is going to go to just service the interest on the debt. So I think Japan is going to have to keep doing QE. The yen is the first currency to hyperinflate.
I mean, the Japanese 10-year yield, I'm just bringing it up on my looking at my screen now, it's 1.949. And we go back a couple of months ago and it was what, 1.3, 1.4.
Yeah, yeah, I know. And I remember
So
when it was negative as well, 3, 4 years ago, Clive.
So obviously, when we get to 2% on the 10-year, which is looking inevitable now, it doesn't mean to say the cost to the Japanese government is 2% on the.
Long-term bonds. So yeah, they can afford to sit on losses, but it could yeah spill over into other markets because if the Bank of Japan also raises short-term rates, that's going to make the carry trade more difficult to keep on because in the carry trade, investors and speculators they borrow in yen to buy higher yielding assets. But if the cost of borrowing yen goes up, he thinks, I don't know if he thinks or if he's got information that I don't have. He thinks Powell announced 45 billion QE. He says T-bill purchases. I'm not sure it will be T-bill because T-bills are very short term. They're up to a year. I think he would rather, if he was going to do QE, he would probably buy longer term paper like T notes, which are 2 years to 10 years, and then bonds, which are everything more than 10 years. T bills are just up to a year maturity. But where did you hear that Nashville passed them? And is that just speculation, or you were you a fly on the wall of Jay Powell's office? Anyway, what do you think, Clive?
Well, I think if it is announced officially, we're going to see an almighty rally, and they won't be, as you say, it won't be T bills. It'll be T notes or T bonds, which are probably I would say T bonds 10 years plus. If it's announced, we're going to see a mammoth rally in the 30-year bond. We could see 20% gain literally overnight if it's announced as such. But I don't think he's going to announce it. I think that's very unlikely. I think they'll start doing it, yes, but whether they'll announce it, I mean, they have said already that the time is approaching when they start buying government bonds. That has been said. But to say we're going to do it on such and such date, I can't see them announcing. I think they'll just
Yeah,
start doing it gradually.
I think it's from, I've been told it's from a story on Zero Hedge, so we're going to bring that up. I mean, it's a paid story. I mean, Zero Hedge used to be free, but I think I can get it kind of monetizing it again from April next year. You'll be able to use it as collateral for loans, not just individuals, but banks and companies. Some people said, oh, it's such a small amount, but don't forget, India has the biggest middle class in the world. Yeah, I know there's a lot of wealth inequality in India, but with 1.4 billion population, it has, I think, almost 300 million middle and upper class. So it's a huge market for that, I would say. And I think, Clive, up until I think gold might have gone up. It could be unchanged on the year or down slightly. So all those people who said Bitcoin is digital gold, well, it hasn't acted like gold. You know, gold is up 61%. Bitcoin should be up this year because of de-dollarization.
An electric car, it might cost you $20 more or something like that for the car. But nothing much is going to happen to the economy because the silver price is higher. What's more important is if the price of all commodities goes up. Now, if all commodities goes up, then we have an inflation, a serious inflation starting, and that means in an inflationary environment, bond yields will go up, bond prices will go down, and people rush into assets which can protect themselves. Obviously, and that would be part of the bigger thing. Why silver already probably is at $100, and gold is probably at 5,000 or $6,000 by then.
Melting up against real money, i.e. gold. This is the Dow gold ratio. And according to this chart, the Dow topped in October 2018. So, and a lot of people don't look at it like this, and they keep expecting a crash and a correction, and it just keeps going up. And the same thing happened in Weimar Germany. The stock market just kept going up, even though the currency was disappearing. But the stock market didn't go up as quickly as the price of gold went up versus the currency, and therein, I think, is the key thing. So we could have some a correction in the stock market, but I think the central banks will always come to the rescue. This year, gold 61, and I think the Nasdaq is only up 16%. But anyway,
Well, there you have. What are you
yeah,
going to bet on? Bet
yeah,
on the silver and gold. They're the ones which are running. There's a
yeah,
huge number of people who've missed the boat. They wish
yeah.
they could have bought. They wish they could have bought at 4,100, 4,000, 3,900, 3,800.
It could come into effect in February, and that's going to unleash 9.3 trillion potentially. That not the whole thing, of course, but some percentage of that could go into gold and silver because and miners because right now you can't in a 401k invest in commodities and